Welcome back to Stocklabs Market Recaps. We just finished the last week of April, which means the month of April has come to a close. So it's nice when the weekly close and the monthly close line up. We got that yesterday, April 29th. Finished up a pretty gross week, which capped off an even grosser month for the markets, because it seems like every one of these weekly recaps, we kind of just talked about how much the market went down that week. And no spoilers, but this week wasn't much different. So we kind of got a little bit, it was a choppy-ish sell-off early in the week. Then we got a bounce attempt mid to late week, but Friday gave back everything that, any progress that got made, kind of in the after hours, Wednesday into, through Thursday. Friday morning rolled around and, it all got taken away over the course of the last day of the month. So just to put some numbers on the indices for their performance, we've got the Dow down 2.5%, was the quote unquote outperformer index wise. S&P down 3.5%, and the Qs were down 4%, with IWM also down 4%. So everything got hit. No rotation from one to another or anything like that. It was just, there was selling across the board taking place. Gold down 2%. Oil actually up 1% for the week, so maybe it's stabilizing kind of around these levels. I know that trade has gotten a bit choppier, from the couple weeks ago at the euphoria highs. Had sort of a big snapback pullback off those really stretched highs, but it hasn't completely fallen apart. It's still kind of basing out a little bit around these levels. So small up week for oil if you're involved in that trade. For our leadership stocks, as you can imagine, they did not fare that well. Amazon, the underperformer, down 14%, got torched on earnings. Actually, I don't think the earnings were that bad per se, but I think it's sticking with the pattern that the market has been in for a while, that there's the funds are unloading these stocks kind of wholesale. They're not really interested in owning them at the levels that they've been at for a while, all last year, all this year. They're not interested in holding these stocks at these levels. So until something changes or they find a more reasonable, I guess, valuation or area price point that people are willing to pay, then it's probably going to continue like this for a little while. Tesla also down 13%. Netflix down another 11.5%. Netflix was the first of the FANGs to report. It had already been down a ton. It got smoked on its earnings, down, 40%, something like that on that day, and hasn't bounced out of that. It's just continuing to slide, and was, again, one of the worst performers. We might be getting close to removing it from this leadership group, because at only 90 billion market cap now, I mean, it's not a leader anymore. We were talking about this stock back when it was like $600-700 a share, which it was a more sizable player. I mean, it's still 90 billion, 85, $90 billion companies big, but it's not compared to these other guys in here. So we'll keep an eye out. Might be kicking Netflix out of this leadership group. Apple was down 2.7%. They also had earnings, which were, generally well received qualitatively. I think there weren't many complaints from people, but and the stock did pop a little bit initially after hours that day, but ended up kind of giving that up too. There wasn't much. I don't think there was much interest from investors to do any additional buying after the report came out. So I mean, you see selling after bad reports or normal reports. You see selling after good reports. It hasn't mattered for these stocks. Not one, but Microsoft had an okay week, up 1%. I mean, actually a great week compared to the overall Nasdaq. And the big outperformer was Facebook, who had been down a ton into their earnings release, which came out on Wednesday, and then squeezed huge overnight into Thursday, which was sort of the catalyst for the Nasdaq trying to stage a bit of a rally off sort of the Wednesday close into, it was trying to start a rally, into the end of the week, which Thursday was a nice up day for the market, for the Nasdaq, but come Friday morning, market opened, selling started. Selling didn't stop until the bell rang, to end the week, end the month. So we closed monthly lows. Nasdaq gave up all gains from going back to January 2021. So if you bought the Nasdaq on New Year's Eve in 2020 and you held it the whole time, you're flat. So there's no gains to be spoken of. Now, the correction has been very severe. The Nasdaq had its worst month since the financial crisis, right? So you're talking about over a decade. Down 15, 16% this month. Hasn't been seen since 2008. So a lot of cohorts of investors. There's a lot of new investors in the market from the past few years. It's kind of comeuppance time for some of them because it's obviously not something they've seen before. For our industries, not great. Healthcare stuck out to the downside, down 6% median basis. Utilities also uncommonly soft. Been seeing a little bit more of this recently, but yeah, down 4.5% on utilities on a median basis, big move for them. And then the rest of the sectors were all kind of the same, 2-3%, whatever. But yeah, not a single sector up. Even basic materials down 3.5%. Said oil was up 1% for the week, but the materials stocks themselves not hanging in as well as the commodity. So we started to see this pattern develop a little bit over the last couple weeks. We'll see if the material stocks themselves regain their composure a little bit, because really year to date, they're the only ones doing anything. Okay, so utilities are slightly up, but 14% on basic materials. We're going to say that's the only green sector or green industry in the market, because tech has been torched, down 26%. Healthcare has been, it is like, healthcare is supposed to be important, right? People think healthcare is important, but to the stock market and people that are making investments, they can't sell it fast enough. I mean, down 35% for the year already. We're only at the end of April. Back to 1 week performance. And for subsectors, we're just going to have to say that there's nothing here. I mean, these tiny fractional moves higher are, with the level that volatility is at in the market, these are basically rounding errors. So we're just going to say that there's nothing positive to speak of on the plus side of this ledger, and on the downside, we've got plenty. So drugstores down 10%. Okay, so these are like you can see like some of the healthcare subsectors are in here. Silver hit down 7%. Kind of. Oh, and gold too, down 6%. Okay, metals getting hit. I know the dollar's been breaking out. Dollar put in a big bottom last year, and or was it last year? Yeah, it was last year. Dollar put in a big bottom. Dollar index that is put in a big bottom last year and has kind of been marching higher forever, seemingly, which just broke out again over the last couple weeks. So could be some dollar pressure you know, putting some weight on gold and silver and those sort of things. Actually, the commodity trade in general, but gold and silver particularly are linked to that. So we got 25, and we got 34 sectors down 5%, which actually isn't as many as you might expect on such a poor week overall, but there are a lot that are right there too. So the negative side of this sort of list is dominating any well not any is dominating the non-existent plus side. So yeah, broad-based selling across industries here, and we'll jump into the screener just to check by market cap, and 1 to 5 billion. 1 to 5 billion cap. Where is it? Okay, it's not up 1%. I know that. What's going on here? Oh, the stock split, so it's doing some squirrely things with the weekly performance. But okay, let's just take it out and check. Okay, down 3.5% for 1 to 5 billion. 5 to 10 billion, down 3%, kind of the same. 10 to 50 billion, down 3.4%. Okay, another one in the 3-ish% range. 50 to 100 billion, down 2.6%. And Terra Caps, over $100 billion market cap, down 2.5%. Okay, so pretty uniform overall. Everything within 1% for the most part. 100 billion down 2.5%, and 1 to 5 billion down 3.5%, with everything else in between. Yeah, that's pretty. There's not enough disparity kind of between them to differentiate that there was any sort of rotation from one to the other. So you saw a whole, basically broad-based selling across sectors, broad-based selling across market caps. That's not a recipe. That's not a recipe for finding finding good uptrends, because everything is kind of melting away at this point. We'll check intelligence just to see what sort of ETFs we have rated bullishly or bearishly for this week. Yeah, nothing too great on here. I mean, short China. Dow supposedly should outperform this week. This ETF is kind of funny to me, but utilities as a sector is not a place that people are making sort of aggressive directional bets. People are parking their money in utilities to collect dividends, preserve capital, and stuff like that. But we've got 3x bull utilities sector here, so we'll keep an eye on Utes to start the week, and see if we can bank some coin on the long side of utilities. Anyway, okay, and commodity index rated bullishly. Okay, so maybe um, crude actually is finding its footing, and then some of the other commodities, gold, silver, could get a bounce and come along. But that's it. This list for several weeks has been very sparse on the intelligence side for things that were bullish. There's not, based on how the action has gone the last, well, now a couple months. Um, Stocklabs is kind of learning that it's not going to get burned by telling you something's bullish if it's not. So once we start seeing some stuff on here rated bullishly, we'll kind of know we're in a bit healthier of a market. But for now, it's just it is what it is, as they say. And let's just invert the screen like we always do to check. Okay, so bearishly rated ETFs. Digital Revolution, I'm assuming that has something to do with crypto or NFTs or whatever stuff, coin miners or whatever stuff goes on in the digital revolution. Mexico rated bearish. Consumer discretionary rated bearish. Okay, so Amazon is I think the biggest component in consumer discretionary. If you use like the XLY sector spider ETF. So consumer discretionary bearish, blockchain bearish, retail bearish, technology bearish. Okay, so it's not looking promising based on this. It looks like there's going to be some follow through continuation downside, even beyond what we've seen the last few weeks. I will say though, we did have oversold signal. So okay, this is 12-month. Starting to see like these 12-month signals are beginning to cluster a little bit. But we actually got as deep as a 10-year oversold signal, which hasn't printed since near the COVID lows. So this is March 16th. Is that right? March 16th. We had 10-year oversold signal. The Nasdaq bottomed pretty close to that, wherever it was that day, that level. The S&P slid a little further for another few days or a week before it bottomed too. But you can see that this 10-year oversold signal, it's like a pretty big stress point in the market. To not have seen it for 2 years. 2 years, yeah. And actually, the market score, so this hybrid score, this tech score that came with this signal, actually broke the low that it generated on this one. So we printed a more severe score on this one than we did at the COVID lows. I can show you that. Let's just go to 10-year. And let's sort these. Okay. Here. Tuesday, the 26th of April, 2022. We got 1.99 on the hybrid score, 1.11 on the tech score, and the COVID bottom was here, March 20th. Oh, wait. The 10-year signal was, where is it? Why can't I see what? The 10-year. Okay, here. March 9th, 2020 was the low signals. Or wait. It wasn't 10-year oversold here. Okay. Let me just go back to this at some other time. Anyway, we got a 10-year oversold signal this past week, so we'd kind of be looking for a bottom. I would be looking for a mean reversion that starts maybe next week. We have a few events coming up next week that are like so first week of the month there's gonna be non-farm payrolls on Friday, employment data, that sort of stuff. Hasn't that report hasn't been that eventful, I don't think, the past couple of months, but is always something on the calendar people pay attention to. And then possibly more importantly, we have the FOMC meeting early in the month this week. So they took April off. And then we're expecting, or the market I think is expecting 50 basis point hike for May. So that'll come on Wednesday or Thursday. I forget exactly which day. Plus we'll get the comments from Jerome and see what he has to say about all this stuff going on, because people are wondering how much pain he's going to allow the stock market to go through. Because it's been a rough year so far. So that's it. We had our contest finish up as well for the trading contest, and Fly blogged about it, but Tex actually ended up winning. First place, Lukashenko came in second, and I think it was Diddy came in third, something like that. I forget. It's on the blog. So congrats to Tex. Won $1,000. Donated it to a former member's charity that he had passed away a couple years ago when it was still Exodus in here. But so nice gesture from Tex. Contest overall was pretty good, but we'll get it better on the next one as far as rules and making sure you guys are not trying to game the system too hard. We had to toss a few people this time around, but those are the breaks. Anyway, okay, I don't want to drag on too much. That's it. We'll start May on Monday, and be back at it. More recaps, more stuff coming out in the next couple of days. So good luck to you guys out there. Just manage your risk a bit, and check back in later. Bye.